Hi, I'm Jake Invest. I'm a long-term investor, and today I'm gonna talk about Apple stock, and they are down in price. Let's see what the hell is going on with Apple. Apple is down to $137 a share. It's now below my average, $140. I think that Apple is gonna move back up. Now, I think they got some things going on that made the company tank. Let's look at this forecast on stock analysis. Okay, so the forecast has a high of $225 a share, and the low is $158. So that's a pretty big low. And this is 12 months out. So long term is what we're looking at. I think that in the long term, Apple will keep going up. And Apple has such a big market cap. It's pretty insane. It has a $2.22 trillion market cap. And if you look at the market cap chart on macro trends, it says the highest point the market cap was $2.96 trillion. So it was this close, that close to hitting $3 trillion market cap. That is insane. And if we look here on Simply Wall Street, we go down to the valuations. I like looking at this site because they do the fair value, the discounted cash flows for us. They have their fair value at $164 freaking dollars, right? The current price is $137. So it is actually 16% undervalued. According to their DCF, their math saying that the stock should be 164. Right? So, I mean, I'm thinking if I get in right now, there is only upside for this stock, okay? And I really don't think that Apple's going to go under like $120 a share. So, I mean, you can hold off. I can hold off on seeing it, or buying into it. But I think that this is like a small window of opportunity for Apple stock. Now, this is not financial advice, and I'm not advising anybody to do anything, but I think over the long term, like 10 years, 5 years, maybe even a year, Apple's going to be a lot higher than the price it is now, right? Unless like this bear market continues for the next 5 years or 10 years. But I think that's unlikely because the economy grows every single year. And, you know, the market always bounces back. It might be a year or two, but whatever, you know. Long term, I'm 26. I got till I'm 66. So let's see what happens. And I just enjoy investing. However, I think that it's best for me to put the most of my portfolio into ETFs like VTI, VU, VGT, or VT. VGT is a tech ETF, which is pretty good if you want to get into the tech sector, but not buy individual tech stocks. Now, I was looking at Nvidia. The fair value was 95 and the stock price was 170. So Nvidia is actually 77% overvalued. Now, Apple is way below its value. So let's see the future growth, right? So they think by 2024, their revenue is going to be $433 billion a year, and they're going to be earning $100 billion every year. And currently their revenue is $386 billion a year and an earnings of $101 billion a year. So I mean, their earnings don't go up that much, but their revenue definitely went up. All right, and that's probably like a low forecast, but whatever. So let's see their financial health. Oh my goodness. So this is not good. Their short-term liabilities do not cover its long-term liabilities. So that's just a quick overview of this company. Now, I'm not done. Let's look at the stocks. Okay, so what's good is that they are buying back shares. So whenever they buy back shares, that means you own more of the company whenever they buy back shares. There's barely any short interest. Operating cash flow was $116 billion and capital expenditures was $10 billion, giving a free cash flow of $105 billion. And if we look at their financials, you can see their revenue here. So they're pretty much they just make more money or have more revenue every year. Like, look at that shit. Dude, $365 billion in a year. Like, that is insane. That is insane, man. Like, that just like stuns me how much a company can make. Now, look at their net profits, $94 billion. In 2020. So yeah, like almost every year they make more money. Now, they do have lower years and higher years, so that's expected from Apple. now, and like that's probably priced into the company. I don't think that this company is going to go down much more. Every year they have a negative share change, and the reason it's green is because that means they're buying back shares and they're not diluting you. So every time they buy back shares, you own a more of a portion of the company, which is pretty cool, and they're not diluting us. And if you enjoyed this video, give it a like, subscribe to me if you want. That would be freaking awesome. I'm trying to grow this channel, and I want to give value in my videos, and I want to just talk about stocks. I enjoy talking about them, go over the real financials. I'm never going to push a stock on anybody like Jeremy from Financial Education. He pushes Tattooed Chef, a very good food company. You can see that he's not talking about a very good food company anymore, because you know why? It freaking hit the shitter. Like, that shit went down, you know? And all of his freaking fans, all the people that follow him, they are all losing their butt. They all are down like 60, 70%. Like, if you bought stocks that he talked about, it's sickening, man. He pushed these unprofitable garbage companies on all these people, dude. Like, it's so messed up. Like, I can't stand that. That's insane. Like, he lost people their freaking future. Like, some people listen to him, and he tells people that ETFs are bad, you know? And like, you're literally losing people all this money. Like, if they would have just put it in ETFs like starting 2 years ago, they'd probably be up right now. Like, it's sick. How do you like live with yourself after that? But yeah, I'll never do that to you. Like and subscribe. Peace.